All right, well, similar to Kelly, let me start by saying the views I'm about to express are my own, and not necessarily those of the Ontario Securities Commission or its staff. I'd hope they'd support what I'm going to say, but they won't trust me. So when Len came to me and said, look, I'd like a regulator's perspective on no-clair. I said, all right, well, maybe I can talk about the development of no-clair and how we were involved. And he said, no, well, Jim's got that. Oh, okay. Well, I'm going to talk about the public interest and how important that is to us as a regulator and how we view that. And he said, well, Bruce has already got that covered. I'm like, okay, well, implementation, maybe I can talk about some of the risks we see in implementation and how that'll work in our Canadian environment. And Kelly had that covered. So I kind of stepped back and said, all right, so what do I think about no-clair? And what can I talk about no-clair for 15 minutes? And so the first thought was easy. I like no-clair. I want people reporting non-compliance with laws and regulation. Okay, so what else do I want to talk about? As I look at the standard and what's going to be coming in place, yes, all those obligations when you know there has been a failure, when law has been breached. All those tools are really good. The next steps are set out. The real issue from my perspective comes back to the judgment of determining what to do when you have suspected non-compliance with law and regulation. Because the reality is that in most of these instances, you have your professional accounts in business, you have your auditors, you have even those charged with governance. They have information in front of them, and they say to themselves, okay, is this suspected non-compliance? What should I do? And the reality is that decision on how you're going to respond to that really has a lot to do with professional skepticism. And I know that's a topic we're going to talk about more today, but I think it's important to talk about that aspect because we think that's going to be a sleeper. We think there's going to be many situations where, in hindsight, something's gone wrong. We'll start asking questions as a regulator. What happened? Why did it happen? Look at all of these pieces of evidence that suggest you should have done something. I think there was suspected non-compliance. What did you do? And many of them will come back and say, no, you know what I did? I think I did enough. I shouldn't have done any more than that. And I think that comes back to a broader question on skepticism and the role of skepticism in trying to apply this standard. So when you think about skepticism, I think about professional skepticism as being the common term. And that's one really that's generally reserved for auditors. It's that attitude that includes a questioning mind, being alert to conditions that may indicate possible misstatement due to error or fraud, and that critical assessment of audit evidence. Now, that audit evidence piece is clearly auditor-focused, but if you take the other two pieces and step back, these are the areas that we need people to think about as they apply no-clair for suspected non-compliance. When you get information, are you taking an attitude of a questioning mind? And are you being alert to conditions that may indicate that possible misstatement? If you look at IASB and what they're doing, in addition to no-clair, one of the things they're talking about now is they have a conceptual paper on whether there needs to be a concept of professional skepticism brought into the code. And that will be for all professional accounts, not just those who are auditors. And so with the increasing complexity of business transactions and financial reporting, together with judgments therein, we think that this is the real key, is that there needs to be more skepticism. If you look at the financial reporting process, all those stakeholders are going to influence skepticism and influence what you think suspected noncompliance is and what you should do. You have the preparers, that accounting staff, or that senior management or senior personnel, auditors, those charged with governance, standard setters, professional bodies who are setting those codes of conduct, as well as the regulators, which we have some role to play. Now, the manner in which each of those parties take a look at skepticism is impacted by the other. Many think it's just the auditor that's driving skepticism. The auditor does their work. They're skeptical of things in management, so management tries to respond by being at the same level of skepticism as the auditor, just so they can avoid having audit issues. Those who charge with government sometimes just rely on the auditor to set their skepticism. You tell me what's wrong. But really, everything's driven by each other. Standard setters and bodies are setting those principles that are supposed to set skepticism for the auditor and the accountants, and even those charged with governance at times. But those charged with governance are indirectly impacting those auditors and how they decide what to be skeptical about. If those charged with governance are asking questions, that changes the level of skepticism that's brought on by the auditor. And of course, the whole development of skepticism, at least the rules, is impacted by management and auditors because they're always commenting on any changes to standards, and they're also being involved in task forces that develop these standards. So in the end, all of these parties are developing the skepticism that we need. Now, regulators, we play a role too. And so I thought today I'd just give a little bit of a sense to you on how regulators help in affecting skepticism and indirectly how that will help with nuclear. So there's really 5 key things that I've identified that involve regulators with regards to skepticism. And the first is the interaction with other regulatory bodies. And that is mainly for us to develop a better understanding of how skepticism is applied around the world. We're members of IOSCO, the OSC, so we meet with the International Organization of Securities Regulators throughout Committee 1, which is focused on accounting, audit, and disclosure. And as part of those discussions, we're often talking about the application of standards, judgment, whether there's been enough work done, how they're making decisions with regards to whether there's enough evidence to make decisions. We talk to audit oversight regulators such as CPAB or the international body, IPIR. We talk to prudential regulators. And those conversations, again, build our knowledge of what skepticism is. So when I talk to my audit regulator, I ask them, what do you think is enough to know that you've made a great decision? When do you have enough information, and what type of biases are impacting your decisions? Our prudential regulators actually get to see the work done by the accountants in business. They're going into those financial institutions and looking at those judgments and the skepticism and whether they're doing the right things to assess what's going on. As a regulator, we impact skepticism through our role in ASOC. The Ontario Securities Commission has a member who sits on ASOC on behalf of the CSA, and Bruce has already mentioned ASOC briefly. We're also involved in communication to standard setters and other bodies. We're helping to set those rules. We're asking for guidance from those bodies so that people have a better understanding of how to apply skepticism. We talk to the international standard setters directly. Canadian securities regulators have not only written comment letters, but have actually reached out and had conversations with standard setters to enhance the need for certain aspects where skepticism can be improved. But really the 2 main areas where we have the most impact on skepticism, particularly in the Canadian market, are our whistleblower programs, as well as our enforcement actions, which is the one that most people think about. Now, when you think about whistleblower programs, these have long been known as a tool for individuals to report fraud. The hope is that the no-declare standards would be something that helped to follow up with the whistleblower standards and allowing more people to report. But historically, these have been viewed mainly as good governance practices, and they are really put together in a more general fashion. They don't think about some of the intricacies the no-declare standard has brought forward. In Canada, at least some securities commissions have started to adopt a whistleblower program. The OSC is one. And our belief is that by having this whistleblower program in place, what this does is encourage skepticism and create channels to report that skepticism. Not only do we encourage entities or individuals to report to us, we expect them to report internally if they have a whistleblower program, which then encourages entities and reporting issues to develop their own programs to improve skepticism. If you have your own program, that sends a view to others that you care and that you actually want to take on issues internally rather than externally. If you look at our Ontario Securities Commission whistleblower program, it's only been around for 2 years, but we've already had over 200 tips. 10% of those tips have led to enforcement action or enforcement investigation. 35% of those tips move forward to other regulatory bodies or internally to the corporate finance branch so that they can do work as well in this area. The Ontario Securities Commission is of the view that a strong whistleblower program is key. And so as the no-declare standard steps forward, the stronger a whistleblower program can be developed internally, the more beneficial the actual application of no-declare can be. I think the last thing I wanted to speak briefly on is OSC enforcement action, because really the most notable role for regulators in impacting the application of skepticism is to reinforce that through enforcement. These actions show that there are consequences, and if you were unable to comply with the rules, that there will be repercussion. And so if you think about some of the things that Anthony said earlier, where is that stick? You can put no-declare in place, but if there aren't people that are actually overseeing it and taking action against it, then it's just a piece of paper. And so as regulators, we are often known to take response after something has failed. We do have the whistleblower program so we can respond early. But I think we've taken more of a stronger view recently on what we can do with other parties that are involved in this, such as auditors. Those auditors are important gatekeepers that we entrust with an important role in our capital markets. And they provide investors confidence that the financial information they are using for their investment decisions is accurate and in accordance with reporting standards. We're finding situations where auditors are not using their skepticism to the right degree. And as a result, we will take action against them. If you look at this recent statement of allegations that we have for Ernst & Young for the audits of Sino-Forest and Zhonghui Shoes, we talked about how they didn't take enough consideration of the evidence they had in hand and whether or not there may have been suspected noncompliance or suspected fraud. So I know my remarks have been short, but I did want to talk briefly on what I think the potential impact of no declare can be. I do think there will be an increased level of whistleblowing, both internal and external, and it's something that could be researched or looked at as it's implemented. But I think in the short term, what's really going to happen is audit firms are going to have to really think about what their protocols and procedures are to do with dealing with suspected noncompliance. They need to identify what that means, how they respond, and how they document their response. And what they plan to do if there is something that continues to be suggesting noncompliance. Because at this point, they can no longer just turn to those charged with governance, report it, and ask them to confirm it's fine. There'll be more that they have to do. If you think about the mid to long-term expectations of the no declare amendments, I think best practices can be developed in business on how to apply skepticism, and particularly with suspected noncompliance. Those practices can be those for those charged with governance or senior professional accountants in business. But again, the anticipated behavioral change really will only work if it's supported by identifiable enforcement action by regulators, by professional bodies such as CPA Ontario, and really ongoing education about skepticism and things such as confirmation bias and anchoring bias and how those things are impacting decisions and whether there really is suspected noncompliance that is noncompliance in law and regulation.